Hello everyone. Today we'll be starting with chapter 9, which is the primary market and IPO. Now here, I'll explain you simply how the primary market works. Where the moves start. The primary market where new securities debut. The primary market is the launchpad for new securities like stocks and bonds. Here companies and government raise capital by selling these securities to investors for the first time. Securities means shares here, okay? Shares or stock. Issuers, companies slash government sell new securities. Now, why governments here? Because there are some companies which are run by the government also. Sell new securities sell new securities directly to the investors, often via investment banks acting as underwriters. So there are many financial intermediaries also here which are acting as underwriters, which means through them the IPO is issued or they have some intervention in the IPO. Now, initial public offering (IPO) for stocks and bonds issued by companies or government. Yes, think of it as the birthplace of securities. Securities means again shares, where they are introduced to the investment world before being traded among investors in the secondary market, like the stock exchange. Yes. So here, understand the primary market. For example, this is a company XYZ. They want to issue shares. So there are some documents that they will be signing in the exchange, which we don't need to cover. So then after that, they will be launching their IPO, initial public offering. IPO means, I'll repeat again, initial public offering. Now here, the company shares, launches its IPO where you can buy its shares. Okay. So in the IPO, there are some certain conditions where there will be minimum quantity, then price range. Okay, I'll explain you everything in detail with practical understanding. Minimum price range, and and also the company details will be there. Clearly will be shown. Okay, so let's go to our Fires IPO. Here you can access it through your Fires Demat account. So here we can see ongoing, upcoming, past. Okay, upcoming. Here we'll have some new companies which are going to launch. So currently there are no IPOs available to invest. There are few ongoing. For example, Lakshmi Dental Limited. Again, here I'm not telling you to invest into any IPOs. This is just for an example. We will understand it just as an example. So you can see the issue date from January 13 to 15. Okay. Price 407 to 428. Yes, you can set a bid order which will be executed between this price, these two prices. Yeah. Quantity, this is the minimum quantity and this is the maximum quantity. Okay, and this is the minimum amount. Now this minimum amount is calculated from by multiplying this 428 by 33. Plain and simple. Okay. Status active, offer details. So you can check all the details here presented by the company. Okay, opening date, closing date, basis allotment, listing date, everything. So you can apply by clicking here. So it's very simple. Okay, but I would suggest everyone to do their own analysis before jumping into any stock or any IPO. So let's come back here. So as you can see, XYZ company has to launch IPO. As I showed you what are the details in the IPO, then this IPO gets listed in the secondary market. Okay, gets listed there. Now here's a catch. Okay, in the primary market, you are buying shares directly from the company. the company. Okay. In the secondary market, understand, okay, there's a huge difference. You're buying shares from someone who has the share. Now, someone can be another individual, or it can be a big company selling shares or dealing in the stock market. For example, a mutual fund company or any other company. Clear? So we are clear here. If you have any questions, please comment down below. Also, if you would like to open a demat account, I will pin the link in the comment. So here, what is an IPO? See, an IPO or initial public offering is when a private company goes public for the first time. Plain and simple. Essentially means transforming from a privately held company to a public one. Companies go public to raise capital by selling shares. They get an influx of money to fund growth, expansion, or pay off debt. Plain and simple. This is what is used. This is what is used for the IPO's money. Now, investors get a chance to own a piece. Public shares allow anyone to buy the company's success. Yes, it is a big deal. IPOs often generate a lot of hype, especially for high profile companies. Plain and simple. Yes. The purpose here is to generate a lot of hype so that people will know about that IPO and they will invest in. It is always important for an individual to do a thorough research before investing in IPO, as there is a chance of very big risk. Now, the risk in IPO. See, rather than telling you all those details, I'll just explain you everything. Okay. See, when the company has launched its IPO, the base price, according to the company, that's the base price. But the stock can still fall. If they have launched the stock at 400, for example, the IPO was filled and was listed at 400. The stock has the potential to go lower. It can go lower to 40 rupees also. Yes. It can even go lower. It can even correct right away 200 rupees, 300 rupees, which I've seen. So whenever you are investing in IPO, you should think a lot. And if you'll take my way of looking at IPOs, I generally don't invest into IPOs. I wait for them to get listed in the secondary market, and then I plan my action, what needs to be done. Plain and simple. Okay. So here we are done with the chapter 9. We are done with the primary market and the IPO, which is chapter 9. Okay. Thank you, everyone.